me start by mentioning what the previous speaker has really mentioned already, which is that financial literacy today is much more necessary than in the past. And what this first slide really wants to indicate is just that the changes that are happening are not just in the financial markets. We see changes in the pension system, changes in the labor market. Financial literacy is a skill that allows us to live in a world which has changed so much with respect to before. So changes are not just in one topic, they are across the economy. And what we have to do, and what every individual has to do, is to make a lot of decisions. These are decisions which are very complex. They cover not just kind of saving and retirement, but cover all variety of decisions, from investing in education to borrowing, to decide how to, for example, protect your family. And I want to contrast in a moment the complexity of decision that we all have to make today versus the knowledge that we have to make those decisions. So this is what I would really like to do today, kind of summarize for you the 15 years of research we have done on this topic, and I will summarize them by trying to answer 4 questions. One is, how equipped are people to make all of these decisions that we see are becoming so much more important and that individuals have to make today? Are there vulnerable groups? Does financial literacy matter? In particular, does financial literacy bring better decision making? And finally, and most importantly, what is it that we can do to improve financial literacy? And I have to say already, today here, with the launch of European Money Week, we have already made an additional step toward improving financial literacy, which is improving the awareness of the issue related to financial literacy. If you want to address this question, as was mentioned earlier, you need data. And the leadership and the visionary, I think, leadership in terms of the data certainly goes to the OECD, who first has redesigned questions and questionnaire to measure financial literacy, both among the adults and more recently among the young. And I'm going to talk briefly about the PISA data. But living in the US, we hadn't had a lot of questionnaire measuring financial literacy. So actually one of the things I want to show you is some of the work we have done to measure financial literacy. And you need to start with data, you need to start with measurement, in a sense to identify the problem and also to inform policy. So what I wanted to show you today are 3 very simple questions we have designed to measure how much people know. And as you can actually read from the screen, these are very basic questions. So we ask people whether they know and can do a 2% calculations. The wording is very simple indeed. Suppose you have $100 in a saving account, the interest rate is 2%. How much do you have after 5 years? And we don't ask people to do a calculation in their head. We ask them to indicate the solutions to that or to pick the right answer. And we allow us to tell us that they actually don't know the answer, so they are not forced to do so. And I wanted to bring this question there to show these questions are very basic. They talk about interest rate, inflation, risk diversification. These are the concepts at the basis of financial decision making. For us, these questions have been a journey through time and through countries, because we started and asked this question in the US first, but we were able to engage central banks, Treasury departments, and regulators in as many as 13 countries, actually starting with the Netherlands, where we have worked a lot with the Dutch Central Bank. And we have added this question in national surveys now in as many as 13 countries. So what we can do and what I can do today is actually tell you a little bit the evidence or answer the first questions, how much people know when we look at this very basic concept. And remember all of the decisions, as I've mentioned earlier, that people have to make when they talk about financial literacy. More recently, with the help of the European Investment Bank, actually we have been able to engage more countries and also do more work, so both measuring financial literacy and also doing more projects on financial education. I want to start with the US and just tell you how much people know in the US, because that's one of the countries with the most developed financial market. And I want to highlight 3 findings from that evidence. One is that as you look at this evidence, per se, if you look at the correct responses to these 3 questions, even in a country with well-developed financial market, the level of financial literacy is not high. And in fact, almost 1 in 5 Americans doesn't know the answer to some basic questions. Most importantly, we see that the responses to the risk diversification question is substantially different than the other, meaning people are disproportionately more likely to say, I do not know, which we understood over time, it's actually a measure of the lowest level of knowledge when it comes to risk diversification, even though so many Americans invest in the stock market. And when we try to put all of these questions together, we see that even in a country with a well-developed financial market, 30% of the population can answer 3 very simple questions. So even in a countries where people do a lot of financial transactions, you cannot take financial literacy as granted. I don't want to provide the evidence for 13 countries, but I want to talk about the Netherlands, given how many Dutch people are here. And actually what I can show you is that the Dutch are not very different when it comes to financial literacy. In particular, even though they can answer perhaps more to the first 2 questions, when it comes to risk diversification, we actually find the same pattern like in the US, which is financial literacy and risk diversification in particular is one of the most difficult concepts for people to grasp. And when you look at the Netherlands as well, again, less than half of the population can answer these 3 very simple questions. You know, when we look at the other countries as well, and the reason why we call this project Flat World, which is the acronym for financial literacy around the world, we find that the world is flat in financial literacy as well, to paraphrase Thomas Friedman, which is that financial literacy is low across many countries, even the one with well-developed financial markets. And that risk diversification and some concepts that we think are at the basis of financial decision-making, I in particular think that risk is very important because all of the financial decisions are about the future, which is by definition uncertain. And so be able to understand and insure against shock is fundamental and important in financial decision-making, yet this is a concept which is not the least, and so much so that it's such a striking evidence that this is the concept across all countries which is understood the least, that actually we wrote a report about that. Just per se, because I think it has so much implication, for example, not just from the banking industry, but also the insurance industry. And we have actually published a paper for each country, kind of highlight how similar, in fact, countries are when it comes to financial literacy. It's not just that across the world people are similar, but it's also important to identify some of the vulnerable groups. And in particular, who knows the least. And I'm going to talk about 2 groups today. Yesterday was International Women's Day, so I'm actually going to speak briefly about financial literacy among women. But another group I want to mention are also the young. And that's because we have new data about the young as well. Let me start with women. And for women, we actually have very interesting findings. Across all of the countries, so in as many as 13 countries, as different as the US, Italy, Sweden, or Russia, women answer in the same way to the financial literacy question. First of all, they are less likely than men to answer correctly. But it's not because they are wrong or incorrect. They are disproportionately more likely to say, I do not know. This is actually a good and a bad finding. It's bad because women are less likely to know, but they know they do not know. So they are an ideal target for financial education program. I think there is a lot to be done, and I think there is an important role, in my view, for women in finance. So I'm directing this in particularly to the leadership here. I actually also want to mention the young. Most of the survey that we do are about the adult, so people 18 and older. And when you look at the across age group, we see that the young are the one who know the least. Of course, they are young, and as everybody said, the young know nothing. So it's actually true, but the problem is that the young people today have to make so many financial decisions. Coming from the US, I can tell you that the young in the US at the moment have to deal with more than $1 trillion of student loans. This is the largest debt market. It's actually bigger than the credit card loan. Well, now we have actually new data, and via the work of the OECD, we now have data among the 15 years old. I cannot tell you how important the project of PISA, the Program for International Student Assessment, has been over time. PISA started in 2000. It measured knowledge of math, reading, and science. And in 2012, via the leadership of the OECD, we have been able to add financial literacy to those questions. I was chairing, and I chaired the financial literacy expert group that designed those questions. And this is probably one of the hardest things I've done in my academic career. It's really hard to design questions to measure financial literacy across countries for 15 years old. But when the data was released last July 9, 2014, we really felt we had put down the first brick to really build a financial literacy policy among the young. And I want to tell you so by actually showing some of the results of financial literacy among the young. In the 18 countries and economies that participated, as you can see, Shanghai, China is at the top, and Colombia is at the bottom. And because we are in Brussels, I have to tell you that the Flemish community that participated in the PISA came second, so congratulations. But also, as you can see here, as for the adult, it's not the countries which have the most developed financial markets, which have young people who know the most. Meaning financial literacy cannot just be acquired by breathing the air or just because you can hear people around you. It doesn't come anymore with the milk bottle. You really have to do a lot more to have young people who are financially literate. And if we dig deeper, and we have designed 5 levels of competencies, what you can see is there are 5 levels, for example, of knowledge that we can define using this PISA assessment, where we consider the basis at least at level 2. So, once students are at level 2 or above, they have some basic financial literacy knowledge, but 15% of the students in the OECD country are below level 2. And as you can see, the top is quite small, only 10% of the students are. If you take the bottom 2 levels, clearly a lot of students really have very, very basic financial knowledge. Remember how many decisions these young people will face, including the fact they have to support us. So it's quite important, I feel, that they are financially literate. And I want to mention another important finding of the PISA data. There are many, and there is a volume, actually, that describe all of those findings. But what you see is, if you look at the students who are more financially literate, and most of the countries have not adopted financial literacy in the school, people who are financially literate are disproportionately coming from families which have high income and high education. So, young people are unequal, they start unequal, and I'm afraid this inequality is only going to grow. And this is why last year we have a conference at the OECD to actually discuss the PISA finding, and the major discussion was about this point, how to create a more equal society. And this is just to show you graphically what happens and how much the variation in financial literacy is explained by the socioeconomic background. And by the way, it's true also for math and for readings. So why should we care? Or does this low knowledge really matter? It does matter, and it matters a lot. So all of the work we have done in these 15 years is actually try to link financial literacy to outcomes. And hence, that's why the presentation was really called Financial Literacy and Outcomes, and also what to do because of those findings. And we have found that financial literacy is linked to behavior, saving, borrowing, retirement planning, but most importantly, more recently, we have also found that financial literacy can be linked to wealth inequality. And in fact, as much as 40% of the difference in wealth close to retirement in the US can be explained by financial literacy. In Italian term, it's like driving a BMW rather than a 500. So this is how people are looking, how different they are going to look like. So to summarize, we certainly need to improve the level of financial literacy, and that's why I'm so glad we have this initiative today in Brussels to talk about the importance of financial literacy. But we need a lot more targeted program that look at, for example, women, that looks at the young, and it's very important to provide access. Without access, we are starting unequal, and we are only going to grow even more unequal. I want to mention next, and what has changed for me being an academic, but at this point having a center, is that academic research can also influence what we can do. And we think that there are 3 scalable initiatives for financial literacy, or places where you can really have an impact. And these places are the school, the workplace, and the community. And I want to show you or tell you some of the initiatives that we are doing at the center, hoping to hear from you afterwards about perhaps some of the initiatives instead that are done in other countries. School is critically important because we need to prepare the new generations, and people have to be, we need to have equality of opportunities, and that's why if I have to indicate one initiative that is critically important, I would say the initiative is the one in the school. Anytime we delay one more year, we have one generation which is going to be unprepared to live in the new financial markets. Of course, it's very hard to have financial literacy in the school. There are several barriers that need to be taken down to do so, but it's critically important. And I really hope that this will be done more and more in Europe as well. And so, we need to start speaking a lot more with the Minister of Education, because these are the people who are actually making the decisions. And I really hope that as we move forward, we will see many more countries adopting financial literacy in the schools. What we have done in the US, we actually have now a course in personal finance at the college level. And we are writing a textbook for that, because financial literacy doesn't need to stop at the high school level. Of course, it's hard to reach the young only in school. You have to also reach them outside of the school. So I actually wanted to tell you of a simple program we have done When you speak to the young, you have to use a different communication method and social media. So for example, we have designed very simple videos which use stories to actually teach about financial literacy. And I have to tell you that even such simple initiative has proven to increase both knowledge and actually better financial decision making. As evidence, I think we can do a lot to actually improve financial literacy. And finally, I want to tell you about one initiative that we launched. It is an International Federation of Finance Museum. We started in Italy. In Italy, we have 5,000 museums, and now we have 5,001. And one museum is actually a museum of saving in Turin. So if you want an excuse to go to Italy, please go to Turin to see this new museum of saving. Actually, I've described in some of the picture there, but we have created a federation with a museum in the US and in China, and now we have 12 more museums of money and saving when people can go and learn about money, and also we are going to do financial education. Let me actually finish by telling you a little bit about our center as well. We are a global center for financial literacy, and we mean each word in the title. This map looks like the United airport map, but this is where we fly when we go around the world. So we have a lot of initiative in many countries. And we are using a multidisciplinary approach because we think that via all this collaboration with lots of researchers, we can shed more light on financial literacy. And we have just launched a new initiative, which is called a Financial Innovation Lab, where we hope to do a lot more experimentation on trying new programs that work, having engaging programs, and really trying to make a difference in research, but also in showing what can be more effective. And we have set up a financial education fund to support that initiative. Let me just end, and I would like to end really with the title of Volume 6 in the OECD, which is that financial literacy is an essential skill today to live in the 21st century. Thank you.